Unfortunately, more states are pausing their reopening plans amid a surge in coronavirus cases. Texas and Florida have now joined North Carolina in delaying the next phase of reopening their economies as they experience a record number of new COVID-19 cases and hospitals become overwhelmed. And new data today shows younger people in their 20s, 30s, and 40s account for a growing number of cases in states where the virus is now surging. And that has prompted renewed pleas for masks and social distancing. Now, on the other side of that pendulum, you've got New Jersey and Connecticut. Governors of both those states coming out today and saying they do plan to open public schools in the fall as those states continue to see a drop-off in the number of coronavirus cases. Despite all of this disturbing virus news, we have got stock futures higher. They were higher earlier. They have now reversed course. And so now we have Dow futures off 146 points. A slight pressure there in the broader market. S&P futures down about 7, and we've got NASDAQ futures off 4 points. Now, this morning we received some new economic data shining a spotlight on consumer behavior during this pandemic. Yahoo Finance's Emily McCormick is going to break it down for us. Hey, Emily, good morning to you. I saw personal income decline, consumer spending, though, on the rise in the month of May. What can you tell us?
Well, Alexis, we saw big reversals both on personal spending and income in May from what we saw in April. So first, looking at personal spending, that rose by a record 8.2% month on month in May. Now, this was a sharp rebound from April when spending fell by a record decline of 12.6%, although what we did see this morning was slightly short of the rise of 9.3% expected for the month of May. Now, this rebound in spending is an encouraging sign for the economy, with consumer spending, of course, comprising more than 2/3 of economic activity. However, it may not prove to be sustainable because of what we saw with personal income. That was actually trending lower and fell by a near record of 4.2% for May, following a record increase of 10.8% in April. Now, looking back at that record for April, that surge was impacted by the government's coronavirus stimulus package and the increased unemployment benefits and direct checks that had been given to taxpayers. Those factors were the main contributors there. So in May, we were seeing an unwinding of those, of course, since the direct checks were not repeated. So this pullback that we're now seeing in May's income could impact consumer spending going forward. So that will be something to watch in the coming reports. Alexis?
For sure. And something that the Federal Reserve watches really closely was out this morning, the PCE index, the Personal Consumption Expenditure Price Index. That's a mouthful. What was the big takeaway there?
Well, the big takeaway there, Alexis, is inflationary trends are still muted given the coronavirus pandemic. We saw the broadest measure of personal consumption expenditures, or PCE, rising 0.1% in May over April. That followed April's 0.5% decline. Now, we saw core personal consumption expenditures, which strip out more volatile food and energy categories, rising 1% over last year, and that did match April's year-over-year increase. Now, core PCE serves as the Federal Reserve's preferred measure of underlying price trends, somewhat less relevant now, just given that the Fed has already telegraphed it's on pause when it comes to key interest rates for the foreseeable future, given the pandemic. It's really looking more at those economic impacts from the virus more so than inflationary trends sort of in a vacuum. But looking at that 1% reading for both April and May, that is well below the Fed's 2% inflation target, again, signaling that inflationary pressures have remained muted.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.